Welcome to the gold bull market of a lifetime, or maybe I should say the dollar bear market, the dollar bear market of a lifetime. It is really the inverse relationship we're seeing. Gold prices that would be unbelievable just a few years ago, and I think it portends some major changes that are taking place geopolitically and within our own markets, of course, our own economies. I publish through Substack. taylorj.substack.com is a place to go to sign up for my letters. There is quite a bit of free stuff that I provide, but for paid subscribers, provide commentary every day, basically, on the news of companies that I cover. A bit of commentary in the news I pass along to my subscribers. We do a weekly newsletter that goes out in a PDF format, and then a monthly newsletter as well. And I use this platform to announce interviews that I do on my YouTube channel, J. Taylor Media. I suppose a number of you have read The Fourth Turning. William Strauss, Neil Howe. It was written, I think, in the late 90s. And they were really going over history, talking about how generations, after about 4 generations, major changes occur, what people believe to be true and what they believe about various things. Their social conditions and attitudes change dramatically. If you think about, I can certainly remember when I was a young man, I had differences with my father, and I think he had differences with his father, and so on down the line. It's sort of a thing that goes through history, biblical history as well. The ups and downs. Ray Dalio talks a little bit about these changes that take place over cycles. When nations become very prosperous, they tend to self-destruct, and when they're at the bottom and have gone through difficult times, they tend to rebuild and do things that are healthy. But I think one of the major changes that took place after World War II, I actually should back up a little bit. With regard to fourth turnings, this would be what's taking place now, and I think well advanced, is what I consider to be America's fourth turning. The first one, 1776, was the American Revolution, when the United States was formed from Great Britain. The Civil War being the next major event. The 1930s, Depression, and World War II being the next major event. And now in this one, I believe started somewhere around 2008. This is based on the views of Howe and Strauss. The main thing I think that changed is that after World War II, the idea of globalism being a good thing, the idea that globalism as opposed to nationalism, because we saw the ugliness of nationalism in World War II. And so some people thought we should just go to some sort of a one world global order in which the really smart people told us what to do. So I think that is playing out now, and a part of what I'll talk about is that. Oops, I'm going the wrong way. Okay. So as the world's leader after World War II, there were those that believed that the United States should take a more active role. And of course, Vietnam was one of the first events. And internally, we also started a more socialist path under Lyndon Johnson. And all this had to be paid for. How were we going to pay for these things? Well, we started issuing debt. And the French said, well, we're not sure we really want your dollars anymore. You guys are printing money. You're creating money out of nothing. Give us the gold, because we were on a gold standard at that time until 1971. And so the United States gold hoard started to leave very rapidly, and Nixon closed the gold window in 1971 and substituted it with the petrodollar. He sent Kissinger over to Saudi Arabia, offered protection for the family to stay in power, military protection, if the Saudis would require people to pay for their oil. OPEC would require countries around the world to pay for their oil in US dollars. That provided a foundation for the dollar, allowed the dollar to become the world's reserve currency. But having the world's reserve currency has its problems. In order to have the world's reserve currency, you have to run chronic trade deficits. And that's exactly what the United States did. We did it by hollowing out, by exporting the industries that really create wealth, like mining and like manufacturing. And so we ran these horrendous trade deficits for a long, long time, and it's continued on. Some of you might remember Ross Perot, who warned about the giant sucking sound that would take place if the United States continued to offshore its manufacturing. And of course, it benefited some people. That meant the United States government could grow, could spend money, could engage in could engage in wars, could get involved in places around the world that we could not have if we had remained on the gold standard. What happened internally, a lot of social issues started to take place. So we had, from 1971 on, at that point, from that point on, a real reduction in the wages of average people. And so while productivity grew, the benefits of that went mostly to Wall Street and away from the average working people. So we had this huge and growing reduction in the well-being of the middle class. This is a chart that shows a sort of separation of the 95th percentile earning such a big percentage of the income, and the middle class just sort of basically stayed where it was. And so this created a lot of issues socially, but also economically, because the United States started going into debt at such a rapid pace that the math just doesn't work anymore. From 2020, we had a $23 trillion national debt. Now it's around 38.8 trillion in just a few years. So this is clearly unsustainable. And I think 2008 was sort of a turning point for a lot of the other countries, the Chinese, the BRICS, those countries that have joined the BRICS. They started saying, well, we're not so sure that we want to keep buying your treasuries. Give us the gold. Essentially, it's what de Gaulle said in France way back when. Give us the gold. We don't trust your dollar. So the banks around the world, not just the 5 BRICS, but lots and lots of other banks. And I think a turning point also was when Russia went into the Ukraine, and the Biden administration essentially took all of the dollar wealth that the Russians had around the world through the banking system and took all of that money away from Russia. And other countries said, well, if the United States can do that to us, do that to Russia, they can probably do it to us. So there's a growing amount of distrust of the United States dollar that is taking place. And so what's happened is the Chinese are throwing that paper right back to us, and they're saying, give us gold. And that's what's happening. So the system, this globalization system is breaking down. I don't know, Michael Every is a pretty well-known analyst from Rabobank. He has flat out said he believes that globalization has failed. I'm not so sure that globalization has been defeated. I think it has failed. But whether it's defeated or not remains to be seen as we work our way through this fourth turning. He's saying that the globalization is really an anomaly that came out of World War II. Essentially, we've always been on a mercantilist system. Nations do what's in their own best interest. They don't sacrifice themselves for some better good. And that's, I think, what we're seeing a return to. Certain interests wants to have globalism. Certain powerful interests, World Economic Forum, to name one, these are people that are sit on top of the power structure, and they want to keep it the way it is. But it's failing, I think, in many ways. And I think Donald Trump is a result of that. Some people have called him Hitler, Mussolini. I think that's a bit of an overstatement. He's more like a populist, like a President McKinley, a Jackson, maybe a Nixon. He is standing up for people that voted for him, essentially, the people that have been hurt by this offshoring and by the globalism. And we're seeing these uprisings as well in Europe with lots of the working class in Europe. Unfortunately, in Europe, though, they're deciding that they better clamp down on free speech and take away the ability for the people in the middle class to speak, because otherwise the people at the top are being threatened, their power is being threatened. We're seeing a fight within the United States as well. Elon Musk on the free speech side, The others on the left side of the political spectrum, not so much. They think that we have to have the kind of speech that they deem to be good, and far be it from us common folks to know anything. So Trump is a reaction to this, in my view. He's really trying to reshore, and that's what he's really opening up for mining. Trying to reshore, is using his tax policies, of course, to try to bring capital back to the U.S. And how effective that will be remains to be seen. Certainly, it goes against everything I've been taught in my economics classes when I was a student many decades ago, actually. But just to give you an idea, mining has been so neglected for so many years. We're looking at 1%. This is mining industry as a percent of global equities, 1%. So capital has not been flowing into mining, which is why mining prices are starting to rise. One of the reasons, in addition to printing money, of course, but the supply side isn't there. And we're running into real shortages. This is a picture of Robert Friedland was invited to the Oval Office along with President Trump's cabinet members, some of them. And Friedland, this is a quote, I'll see if I can read it here. Friedland told President Trump, "You can't reindustrialize without a lot of metal. Everything you touch has to be mined. Mining isn't 1%. Mining is just 1% of the S&P, down from 11% in the 1960s. Then he said, moral among miners with regard to the Trump's administration is sky high, he told the president. Reshoring America's industry and gaining independence from China will ignite in a historic commodity bull market. Those are the words of Robert Friedland in the Oval Office. So there is definitely a desire in the Trump administration, probably because it helps the people that voted for him. But I think he also understands that the path we're on is unsustainable. Certainly the markets are saying that. This shows the Sprott Physical Gold ETF going back 5 years, I believe it is. And this is the TLT, which is the long-dated U.S. Treasury, which is down significantly, 47%. Oh, this is since June of 2020. So global investors have lost confidence in the U.S. dollar. That's quite clear. And who's going to buy the treasuries is a big question. So the gold prices have gone up mostly because of foreign central banks, not the Western central banks, but primarily not. Banks and countries that see the United States as a threat. And they're the ones that are really driving the gold price. I think more hedge funds and some bigger investors are coming into the picture, but this shows that gold flows, cumulative inflow of asset classes from investors in America. And this was a chart, this was a slide from Bank of America just recently. So we have this amazing bull market. I'd like to keep track of average monthly gold prices. And that's what you see there. And, clearly the gold price is now over 5,000, but that's the latest monthly last month. What we're seeing is, despite the gold price rise and mining profits starting to really take off, we're seeing a huge discount to free cash flow from the GDX ETF group of companies. So it tells me that people just aren't really paying attention very much yet to the prosperity, the amount of wealth that's being generated by the gold miners and the silver miners. But I think that's going to change because companies are really gushing cash. This is a slide from Agnico Eagle was one of the first major companies to put out their earnings for the full year. And you can see they've jumped income per share from $3.04, from $3.79 last year to $8.89 this year. And keep in mind, I mean, that was, gold, that's with an average gold price much below where it is now. And of course, the last 3 months, $3, they basically tripled their earnings. And then on the free cash flow, they generated actually $1 billion in the last 3 months. Of free cash flow. That's Agnico Eagle, certainly one of the better, stronger mining companies, but nonetheless, I think very representative of what I'm seeing with some of the others that have recently reported their earnings. How high will gold go? Well, I like to answer that question by saying, how low will the dollar go? Because really, that's what it's all about. The dollar is being replaced by real money, as J.P. Morgan said. Gold is money, everything else is credit. There's a thoughtfulmoney.com, Adam Taggart. I highly recommend if you want to check out somebody who's really good with financial interviews. Thoughtful Money, and he interviewed Luke Groman, who's an analyst that I've come to respect very much. And Luke is saying, what can the United States sell if we want to reshore? We've really stripped out the middle class. The skills that are required to do manufacturing and to do many of the things that Trump wants to do are clear, and the know-how is just clearly not here now because we've not been doing it for decades since 1971 and after that. What Luke's argument is that one thing that we can produce in the United States that the rest of the world will want is gold. In fact, he asked the question, what else can we produce? Well, I'm sure there's some things, but we don't have a big advantage in many different areas of production. So I think Luke raises a good point, but the idea also is, whereas the United States policy had always been to suppress the gold price, to keep it down, to make the dollar look good, now what Luke is suggesting is there's going to be the opposite incentive would be to see higher gold prices, because that would mean we could send fewer ounces of gold across to other countries to pay for the things we buy from them. I don't know. I mean, it's just an idea. It's a thought that makes some sense to me. But how high might gold go? Well, if we look at the gold coverage the United States says it has, we don't know if it really has all the gold it claims it has. That's a mystery because it hasn't been audited truthfully since Eisenhower. We have 3% coverage right now with gold at $4,800. To get back to 1980, when we had 18% coverage of the federal debt, gold would have to get to $26,000. If we went back to the 1930s, when the whole world was on a gold standard and the United States was on a gold standard internally, they had 51% coverage of their debt. Of course, they had very little debt in the 1930s, but it would require a $75,000 price of gold. My point is that it doesn't really make sense to ask where is the price of gold going to go, because you're measuring it in dollars, which is a nonsensical unit of measure. You can't. The late Ian McAfee used to say, an ounce of gold is an ounce of gold. A barrel of oil is a barrel of oil. What is the dollar? To me, that made a lot of sense. So in my newsletter, we had a pretty good year last year. Shame on me if we didn't. We were up 119%, bolstered to a great extent by Hydrograph Clean Power. And I'm glad to have Carrie Landis here to talk a little bit about Hydrograph today. It's a stock that's done extremely well for me and some of you in this room. But I've also done technology things as well. Hydrograph isn't the first, but it's been the most outstanding one. Just to give you an idea, some of the Abex Technologies is a fintech company that I really like a lot. It's doing very well. Bloom Energy Systems and Oklo Inc. Energy Stories that did very well. I sold them. And Hydrograph Clean Power, which I own, was up on the year 1,400%. It's up much more than that now. Very exciting story. I'll let Carrie talk about Hydrograph and what it is and what it can do, but it is an amazing breakthrough material that was understood years ago when scientists first were able to produce it on the lab scale, and the properties were just absolutely amazing. But nobody could produce it in mass until Hydrograph came along, and on scale and at low cost and energy free. Takes virtually no energy at all to produce this product, and Carrie can talk about that. 200 times stronger than steel, thermal conductivity 10 times copper, electrical conductivity 1,000 times current capacity of copper. It goes on and on. It's thin, it's harder than diamonds, it's pliable. It's an amazing new creation that Hydrograph is the only company really that can produce this this material right now and do it in mass and very economically.